I've been experimenting with zero DTE SPX options strategies, trading different ways. My goal is to be able to make money consistently every single day. Maybe not every single day, but 3 out of 5 days a week, and be able to print money week after week. And that's going to allow a lot of freedom. And, a lot of people don't want to work for somebody else. So that's my goal, to be able to create that income and create more freedom. So with that, I've tried many different strategies. I've tried selling credit spreads, call credit spreads, put credit spreads. I've tried buying options as well. And when you buy options, you've got to get the timing right. And then you've got timing, sort of time decay working against you. And that's very difficult to do. So what I'm going to do in this video is I'm going to cover the strategy that I found is the safest strategy going forward. And it doesn't really require you to know which direction the stock is going to go, the SPX. I don't think anybody knows in the short term, in the day, which way it's going to go. It's almost a 50-50 shot, right? So it takes advantage of direction, playing both sides, and it also takes advantage of time decay. So in the way that I'm going to show you on this video, we're going to be able to take advantage of time decay throughout the day in the safest way possible. Before we get started, if you appreciate the time and effort that goes into making these videos, if you can do me a huge favor and click down below the like and subscribe button, it helps to get the video out to as many people as possible, and I really appreciate it, so thank you very much. And disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks outright. We also have a paid course that is very reasonably priced if you want to dig into the options a little deeper. Use the link below and open an account with Moomoo. You can get 1.5% cash back and free fractional shares of stock for opening an account with just $100. Open with $1,000, you get more benefit, and I recommend that so that you can place a few different trades. You also get the free charting software, and Moomoo is a zero commission platform. All right, guys, so what I'm going to do is I'm going to go through my rules first that I have for trading zero DTE SPX options, and you can see they continue to develop over time. So I'm going to go over my latest, but like I mentioned, I was buying options, and I found this one to be the safest strategy going forward. So what I don't do is I try not to trade the first hour or the last hour of the day. This is when the market is most volatile. So I want to take advantage of the time decay. So I trade, I kind of watch where the market opens, and it sometimes gaps up or down. And then you can you find your range that you're trading within that first hour of the day. And then that's when I put on my first trade. And I'm doing iron condors. So I'm selling a put credit spread and a call credit spread. And I'm going $10 wide now. So I want to collect a third the width of the strike. So around $300, $333. If you're going $5 wide, you want to collect around that would be $166 would be a third the width. But anytime you can collect on a $5 wide, 170 to 200, and then on a $10 wide, if you can collect over $3, which is $300, your max loss would be $700 if it moves outside that range. But you've got roughly a 70% probability of profit. So that's what I'm looking to do. I put this in red. I was watching some other videos, and I'm considering stop losses, but right now I'm not doing stop losses yet. But I'm going to look at that this week and see if that would benefit me at all. But that's not what I'm talking about today. We're selling premium, and we're looking to make money on the time decay, and it's due to the probability of profit. I want to wait and take profits when I have them. So if at any time during the day it moves and tests my short call side, then I can roll down the put or close out the put, maybe put another iron condor on. That is what I'm looking to do. And you've got to determine your max number of trades that you're going to do during the day. So what I'm going to do is I am going to go through the trades that I made on the option trading platform. So if you look here, SPX, you can see in the last 30 days I haven't done too well. But this came up because I'm going to go over the last 2 weeks, and I made I think $1,800 over the last 2 weeks. If we look, if we do custom here, and then we put in SPX, and if we go, what I'm going to do, today is the 26th. It's Sunday, the weekend, but I'm going to go start on this week of the 13th, and then I'm going to go through basically today. And you can see $1,886. These are all SPX trades in this account, $1,886. So almost $1,000 a week doing this. And I can up the number of contracts, and then you double the number of contracts, I'm making $2,000 a week. So that's what we're looking to do. And if we start here, the first trade on Monday, 5/13, we sold an iron condor, 52.40, 52.45. So if I was only going $5 wide here. Since then, I'm pretty much going $10 wide. You'll see in this last week. And then we sold the 52.15, 52.20. Now, if we look at where we did that, it's right here. Here's where the market opened. And this is just trading view and what I'm kind of using to track what I'm doing. And this is my short strike. So here is the 52.20. Here is the 52.40. And if you look there at what we did, 52.20, 52.40, and collected 210. So they match up. This is exactly what I did. And this is where the stock, so you can see it gapped up at the open. The yellow line is the vertical when the day opened, Monday the 13th, 6:30 a.m. I'm on West Coast, so the market opens at 6:30. This is when it closes at 1 p.m. Pacific time in California. So 52.15, 52 or 52.20, 52.40. This is the iron condor. I clicked $210 at 7:24 a.m. So you can see this lines up, 7:24 a.m. All lines up with my trading platform as well, 210. Okay. I will get better at presenting this, guys, and clear this up. It's going to be a little confusing at first, but you're going to hopefully get the idea. And I'm confident that using this strategy, I can make money almost every week. But I put on the iron condor, and then here's where time decay. If you're buying options, it kills you. If you're selling like we're doing with the iron condor, you just watch your money click up and continue to do well. But it started testing my short strike down here right at 10:03 a.m. So at 10:10, I rolled the call spread down to the 52.20, 52.25. So I closed this out, rolled it down here. I collected another $130. So now I've got $340 total collected. So now let's look at that. You can see right here, call spread, buy to close, sell to close, at 52.40, 45. And then I went down to the 20.25 and collected $1.30. So it's $130. Right here, $130. So 340 total collected. Now at 12.55, I did hang on, it looks like, right to the end because it was trading within this range. So, again, I like to close out and be done an hour before, but oftentimes, as you'll see in this video, I'm not able to close out that way. And sometimes I'll wait and roll to the next day at the last instant. So that's part of the strategy as well. So at 12.55, I closed out and I only made $95 for the day on this trade. You can see right here, closed out for 245. The iron condor made $95. So hey, it's a winner, 95 bucks. The next day, okay, 5/14. Let's move on, and we're gonna go through 2 weeks. So I'm gonna try to move through this quickly. But at 7:09, I sold the 52.05, 52.10, 52.45, 52.50 iron condor, 205. I could only collect 200. So, oh wait, yeah, but that's $5 wide. So that's more than a third the width of the strike, which is not bad. Here's the 205. I closed out at 10:44 a.m. and was done. I closed out for $35, made $170 $170 on the 14th. So let's take a look at that. Right here, I closed out 1044. If you look here on the time, 1044, 170 profit for the day. I was done. All right, next day, look at that big gap up open. So that's why, I don't really like to trade right at the open. I like to settle, but I put on a trade, it looks like it's 7 a.m. This is my iron condor. IVR was 11, so there's a big expected move. But I collected only $170 at the start. That's not, oh wait, yeah, that's okay because it was a $5 wide. So that would be right here, 170. And then it looks like the put spread, because the stock price moved up, I rolled it up and collected another $65. So let's take a look at that. Yep, right here, I rolled up. You look at the timeline. So the orange lines are where my short strike is on my iron condor. So now I closed this out because the put credit spread was already a profit. I rolled it up, collected $250 more. It would have been nice if it would have just kept trading within this range. Then I could close out for a complete winner. But it kept moving up. Yikes. So now what did I do? At 818, we were way up. Well, it kept moving up. So what I did was it was up 40 points on the day. So I sold a call spread for $130 and collected. So I collected another $130. So now I've got $365 total after collecting what I've already collected. Let's look at that. Here's the call spread that I sold, $1.30 on the 15th. And then what happened, it looks like I had to roll out. So at the end of the day, I let my put spreads expire, and then I rolled out the call spreads the next day, hoping it would come back. So let's take a look at how that looks. So it kept moving up against me. So my put spreads were winners. At 12.17 and 12.10, I rolled for $5 and $30 credit to the next day. And I rolled right here to the 5,300. And we can see here, $5, $30. We're at the 5,300, 5,310, 5,300, 5,305. One's $5 wide, one's $10 wide. Okay, now the next day on the 16th, right at the open, let's see what happened. So here's Thursday the 16th. If you look down here at the bottom, you can see the chart. I've got a call spread down here. I was confident in rolling up the calls because they were up $80 for the week already. So with them up, I figured at some point they're going to come down. But you can see all day they were up above. Finally, at the end of the day, both call spreads expired worthless. They would have been cash settled. Okay, so what's nice about SPX is they're cash settled. So even if you're not going to be assigned any stock, there is no stock. SPX is a ETF type deal. So it is cash expired, which is great. Also tax advantages of trading SPX daily. So at 12:38, I sold 2 for the next day. So I thought, hey, it's been up for the week. It's going to keep coming down. So I went ahead and sold 2 the next day, 5,300, 5,310s, and waited for these. I just let them, since we were hovering right there, I waited and let them expire worthless, and they did. So that's what happened there. All right, guys. So Friday, we look at Friday. Friday's the 17th. What is Friday? Let's see. So here's Friday the 17th. All right. So I closed one position. So it did move down. So I closed one of my call spreads at 7:05 a.m. for $410. So I made a little bit of profit there, and I had one call spread on. And look, it continued to move down. It would have been great to sell them right here, but hey, you can't always time the market. perfectly. But what ended up happening is I made, looks like $895 on that. So I traded, I put the two call spreads on here on the 16th. I closed out one for $4.10. I bought it for $5.40, so it was profitable. And then this call spread expired worthless for 32, and then I had one that I closed out for 95. But overall, $895 profit there. Let's move on to the 20th, the next week. It's a little hard to kind of try to explain this, but hopefully you get an idea. Let me know in the comments any questions that you have. But this is Monday, May 20th, and I let the market open. Then I put on my iron condors right here. What is that? 724. I sold at 5,300, 53.10. So $10 wide now. I'm getting a little. The second week I got a little more aggressive. Iron condor I collected 325. So almost right around a third the width of the strike. And it actually ended up expiring worthless for 325. So 728, let's take a look at that. Right here, 728. There's my 325 collected. And it did end up, this is on 520 at 7:28 a.m. It expired worthless for $325 profit. So you can see, you know, all these profits with this type of strategy. So that expired worthless. Down here, it looks like I put another trade on at 11:09 on the 20th. So let's look for that. 20th. Okay, so here's my 11. Here's the trade I put on it. 11:09. Collected 220. Let that go. Or I actually closed out the put spread and let it go, but made 205 bucks on that. So here's where we're at. So the total for the day was 325 plus 205, $530. But I normally don't put trades on this late in the day at 11, but I did. All right, so here is a clean slate. We're on Tuesday the 21st, and it looks like the market opened here. I put on this iron condor at 653, 52.80, 52.90, 53.15, 53.25 for $580 right here at 651. Here it is. On the 21st, 653, 290. The 52.90, 53.15. That's this one. Yep. So put that on, and then at 8, it kind of tested my call side, and then I put another iron condor on at 8:42 and collected $210. So let's find that one. Yep, 210 right here. You can see I closed out and made 150, and I closed out at 12:06 and 12:26. Right here. Yeah, this is kind of confusing. I got to get better at showing this, but you can see where I closed out. So I made 150 for the day. All right, let's move on to 523. I don't want to spend all day going through this, but you can see the strategy. Made $85 here on the 23rd, 24th, lost 110 here on the 24th, and then made 185 at the end of the day. So again, the big takeaway is $1,886 over the 2-week period from 513 to 526. And you can kind of see the way that we're trading this. We're letting time decay work. So what's nice was when you put these iron condors on, you just see your profit just creep up over the day as it stays within the range. So I like that much better than watching it decay and just move down against me if I'm buying options. So that's kind of the whole point of this. I'm going to keep doing it. Here's the 23rd. I'm not going to go through each one of these trades, but you should kind of get the idea. Let me know in the down below if you have any questions about it. All right, guys, that's it for today's video. I appreciate you watching. Please remember to hit like and subscribe down below. Sign up for Moomoo, 0 commission trades, 1.5% cash back, or free fractional shares of stock. Leave a comment, ask a question. I answer every one, and check out the free options workshop as well in the link below. Thanks for watching. I'll see you in the next one.